Hi everyone, this is Jim Carter from Element Funding, and I'm doing this for my blog at MiamiHomeLoansForYou.com. This video addresses some of the tax issues known to be important to determine which income can be used to qualify a borrower. Please check with your tax preparer prior to taking any action on any of the mentioned items. This is not meant to be any advice on taxes or tax filings, only a suggestion to question your tax preparer to make sure you are certain of the outcome of taking specific actions. I am not a CPA, tax preparer, or financial analyst, and do not suggest any of these items should represent any course of action for a home buyer. First slide we'll look at is a 1040 U.S. individual return. Look at line 12, a business income or loss. Schedule C or C-Easy. This line is a direct deduction or increase to a borrower's income. In this case, it is not a big deduction, but keep this in mind when determining how you and your accountant handle your Schedule C business expenses. The next slide we're going to look at is also a individual business tax return for the year 2010, and on that one we're going to look at lines 12 and 13. Line 12 is a business income or loss on this Schedule C. This is an increase that will help a borrower, but make sure you have 2 continuous years of improving Schedule C income when you do report this. This third slide is a 1040 U.S. individual return for 2011, again on line 13, an example of a loss of income deducted from a borrower's gross income. This is a 6% deduction, so it can make a difference when qualifying for a loan amount, and for any kind of loan as a matter of fact. And then the next slide is going to be Employee Business Expense, Form 2106. Now this Form 2106, look on line 10, and it states it goes to Schedule A, line 21, which is another area of business expenses that can reduce the borrower's income, resulting in a lower amount of qualifying income, smaller house payment they can afford. The next slide is an itemized deduction, Schedule A, for 2010. Look again on line 21 here, unreimbursed employee expenses. This line is used by many people for various expenses. However, it is a direct deduction to a buyer's income, and in this example it will deduct about 31% from the income. That will definitely make a difference in the amount a borrower can qualify for during the purchase process. The next slide is a Schedule A itemized deduction for 2012. Line 21 and 24, which is the final amount, again are generally total deductions from a person's income. In this case, it's a 61% deduction, which is a very large amount to deduct from anyone's income. As stated earlier, this is a direct deduction from the amount of income originally reported and will affect the borrower's ability to buy. This is a Schedule C-Easy, an itemized net profit from a business for 2010. Look on line 3, the net profit. This is either a deduction or an increase to a buyer's income, and in this case an increase. If it hadn't been a negative number, it would decrease a borrower's income as well, thus reducing that borrower's amount to purchase a home. Now the final slide here is a Schedule E supplemental income and loss for 2010 this is from rental real estate, royalties, partnerships, S corporations, estates, trusts, or RMICs. Line 26 is either an increase or a decrease in the amount of income the buyer can use from one of these additional types of income. So again, depending on what it is, it'll help or hinder the person's ability to purchase a property. And finally, that is an overview of some of the tax forms required and how they can affect a buyer's qualifying income. For more help with determining what qualifying income you or your buyer can use, give me a call. Jim Carter, 305-525-6742. That's 305-525-6742. I look forward to hearing from you soon. Have a great day. Ciao.